Hey everybody, it's Mike from the HomeHappy team. Here with Matt Steele from what's the name of the bank?
Yeah, Home Equity Bank.
That's great. We are here to talk about stuff that a lot of people get worked up about or have an idea in their mind and it's probably wrong. We're going to talk about reverse mortgages, that bad word. Um, and in the past, we both know there was some reasons why they got a bad name. But the bank you're representing and the stuff you guys are doing is nothing close to what that was. And I wanted to talk to you about that and maybe just do an introduction of you and let's go from there.
Yeah, yeah. So I've been in the mortgage space for, gosh, plus 10 years doing a bunch of different stuff. But I decided to come over to CHIP about 5 months ago. And I've got to say, the trepidation that you speak of, I come with it as well. Thankfully, I had a trusting friend, Dimitri, who suggested to come over. But it was a real eye opener, I would say. I didn't know fully about reverse mortgages, and I didn't know about all the concerns behind it. But as soon as I started to tell friends that I'm working for Chip, it was usually kind of great feedback. Oh, great! I'm happy to hear about the new job. But then I would use the term reverse mortgage. And as soon as I said that, I could see the body language of whomever I was speaking to quickly change. So part of hearing other people on my team talk and part of hearing brokers talk and clients talk and doing some research myself, it all kind of derived from what was happening in the US and in the UK. And I think the biggest thing that happened in the past was people would get these reverse mortgages by private companies in these other countries. They would get the mortgage for 5 years. And then when 5 years was up, the private lender might say, you know what, I need you to pay that back. So it's a little different here in Canada. We're operated by a Brit bank. And if we start a reverse mortgage with you, we continue it until you decide to pay up the mortgage, decide to sell your home, whatever it might be.
Yeah, there's I feel like it's like when you're told you never get an extended warranty on a car.
Yeah.
It comes from some reasonable ideas, but it's a little out of date. And I know that we have done lots of these and yes, of course, I mean if somebody has millions in savings and has either a line of credit on their home or doesn't owe anything, great. If you don't need a reverse mortgage, we're not going to, talk. But there are people that are in those scenarios where they have a lot of equity in their home, but they don't have the income, or they're very limited on income. And I think for those scenarios, a lot of the times a reverse mortgage can be amazing because it can mean that they can have a great life and have great life experiences because of the equity in their property that they've built up because they paid their mortgage off 10 years ago or didn't pay it off. Like the beautiful,
Absolutely.
and the beautiful thing about equity is that if it's sitting there, it's great, but let's talk to like a lot of people, they get in their 60s and 70s and they've retired, but now they're finding that the pension doesn't give them enough to actually do much, or they're very limited on the pension and whatever. Talk
Yeah.
to maybe their kids and like what this can do for somebody in that scenario, how it can change their life.
Yeah. Well, I think the first thing I would speak to is a lot of us in BC, we've kind of won the real estate lottery.
Yeah.
One of the things that was mentioned to me, my family, my wife's side, her mother wears paying off her mortgage and not having to mortgage it as a an armband. She could never consider something like this.
Yeah.
But you think about RSPs, pensions we pay into all these things, included our mortgages when we purchase a home. For what reason do we think it's not valid to start taking some of that out? We've been paying into it all of our lives, only to hold off on taking it out down the road. This is a good option for that.
Yeah, and what I've said to clients in the past that are going to in that retirement zone, and it's a little harder. The banks literally used to kind of give out mortgages a little easier to older people. The real changes came along, and they're very tough, and now those same people get turned down by their bank. And then I've seen people who think they have no other option but to sell their property, and they don't want to, but they think they have to. And that's where I think for kids of those parents, like, we have options for them that don't have to hurt you or hurt them. It can be an amazing option to keep your parents in their house, and even give them some money to use to have some life experiences that they probably didn't think they could afford anymore. And to me, it's, if they're still healthy, then why not take advantage of that situation? That's what these mortgages are so good for.
Totally. And I mean, one of the common questions I hear is, why is a chip mortgage better than any other option? And I think the correct answer to that is, it's really not. It's one of the options. So a client would come to you, whether it's a parent or a parent's child who wants to start that discussion, and maybe they have money sitting in their savings account, and that's the best option for them.
Yeah.
The kind of two things that you've heard me talk about for years is the two things that people care about are rate and payment. And so if a client has a line of credit, that might be a great option for them. The downside of that is that they'd have to make a payment when they do take money out of their line of credit, or if they do get a traditional mortgage. With us, they don't have to make a payment, but maybe our rates are about 1% higher than, say, a normal institution. Maybe rate is more important and less about payment. And that's kind of the deciding factor.
Yeah, and I think one thing to think about for a lot of people is they can still have a big RIF or RSPs or savings and not necessarily want to use it all, or not right away. They want to save that. And that's where I think a reverse mortgage can be handy too. I mean, if they're making more than the rate on the mortgage in their RIF or RSP, why would you want to cash that out and do whatever it is you want to do? I mean, some people want to help their kids or grandkids buy that first property, and if they cash out their savings, they're going to feel a lot more scared. Whereas maybe this is a vehicle to help them to do that.
Totally. I mean, I think of my family. Unfortunately, the bank of mom and dad was shut down to me, but for my stepsister, she got into a place and she needed help with a down payment. And originally, my parents were going to just take money out of their investments, but sometimes timing's the issue. Sometimes there's tax reasons. In their case, the stock market took a bit of a hit, and they didn't want to crystallize those losses. They weren't ready to do that. So for them, a mortgage made the most sense. And then when they feel appropriate, they'll end up paying that mortgage off. But it's the discussion. It's the discussion.
Yeah. And that's where I think there's some things people probably don't realize. I mean, the biggest thing about a reverse mortgage is you do not have to make payments if you don't want to. However, you have the option. Talk about that.
Yeah. And that's kind of the biggest thing, is the concern of, the power of compounding. I'm worried about the amount owed to continue to grow. And for those people, you can make interest only payments. So you've got the option to make no payments at all. You can make payments, just the interest that accrues on that loan, or you can make 10% payments against the principal every year if you so choose as well. Now, traditionally, it's usually one of the two, but
sure,
that is up there.
Yeah, it's good to know there are those options. It doesn't mean everybody has to take advantage of them, but and that's where, like you said, timing. It might be something where 5 years from now, they're okay with paying the mortgage off, and their mortgage would come due, and they could pay the lump sum and pay it right off, or make interest payments between now and then, or just leave it. I just like that it gives people a lot of different options, and they probably don't realize they have available.
Let's be honest, the dialogue between my stepsister and my parents were, this is a loan, but as we know, as banks, it's not a loan, it's a gift. Where it's going to shake out down the road, who knows? But it's again part of that dialogue between the family member and the loved one willing to help out.
So you mentioned that the interest rate is usually about 1% above regular mortgage rates. Other than that, what other cost is there to set one of these up?
Yeah. So first I'll touch that because that really, for some reason, that sticks with me. I can only imagine when I went to get my first mortgage. Could you imagine if there was a little box on my application that I could check where for an extra percentage point, I can have the option to make no payments or interest only. But alas, that find that stands out. But as far as the cost go, we have a $17.95 initial fee to set up the mortgage, which is probably different than any other institution. That's the one that stands out. And then the two other costs are pretty normal to any institution, which is an appraisal fee, approximately $350, and a lawyer to set up the mortgage, around $1,000, $1,200, depending on. Well, you probably have more experience in that. I'd say it's around there.
Yeah, yeah, and so once those are done, the mortgage is set up. The client has a choice; they can take a lump sum. You guys can also do monthly payouts. Is that right?
Yeah. Yeah. So there's a couple options. Our income advantage is really trying to supplement income. So it's great for somebody looking for a reverse mortgage, but for the purpose of helping a loved one with a down payment, probably not what they're looking for.
Yeah.
Our traditional reverse mortgage, what we do is we provide an approval. Let's just say we provide an approval for 300,000. They can take 100,000 now and have that deposited in their bank account. They only pay interest on what they borrow. They have an additional 200,000, kind of like a line of credit, that they can simply call our team and ask to take more out when they so choose.
Okay.
Yeah.
So, yeah, once again, it's all about options, all about having a discussion, figuring out what the best way to go is. That's what we do. We sit with the client and have a chat, and then we would follow up with you and make sure everything kind of fits and works. Other than that, I guess, is there anything else you want to add? Anything you wanted to put into that discussion?
Well, it's funny when we talked about getting on this call, the one thing that really stood out to me was the relationship between between the discussion we're having. We're starting to see well, I can say in my previous job, even over a 4-year period, I would say the amount of gifted down payment I would see from family members, I mean, it tripled, quadrupled. It was a substantial increase.
Yes.
And why is that happening? Well, because places are going up, and so as places go up, there's more equity available to them. So it's an interesting relationship between the person, it's costing them more to get in a home and they need the help. And then on the other side of the coin, some people have that opportunity to provide the help if they need it.
Great point. Yeah, it's definitely, the more that our values have gone up, the more it affects everybody, especially first timers trying to get into the market. And I mean, all of this is just a discussion. We don't, every situation is different, so it's hard to give everybody an exact answer on all of these scenarios. But I think the key here is, let's just give us a call. We'll have a chat with you. If it's something that fits or looks like it could be a good option, then Matt and his team would be involved. But if not, that's okay too. So, but yeah.
And Mike, I'm happy to be involved as much or as little on any conversations that you have with all your great clients out there.
Perfect. Thank you so much, Matt. Really appreciate your time.
No problem. Take care.